Our perception of money is changing rapidly, and banks are at the center of all of it. From how we access it, to how we buy, to how we trust that that money will be there when we need it. I'm Kiah Haslett, the creator of FinTech Takes Banking. Here on Bank Nerd Corner, I talk with bankers, economists, academics, and more about the complex dynamics shaping the financial services landscape. This week on Bank Nerd Corner, I'm joined by Trent Sorbe, Chief Payments Officer at First International Bank and Trust. In this episode of Bankers Hours, Trent and I talk about why South Dakota became the payments capital of the United States, the evolution of banking as a service, why culture is so important in the BaaS space, and some of the not-so-small hills that he'll die on. Banks worldwide use Tactile's AI decision platform to power their credit, fraud, and compliance workflows, and adapt them in weeks, not months. Built for banking, Tactile's platform is transparent, audit-ready, and made to test and optimize decisions continuously. Learn more at tactile.com. Hi, Trent. Thanks so much for joining me today.
Hey, Kiah. I'm so happy to be here. Congratulations on the new podcast, and I'm glad I'm an early guest.
Yeah, I'm so excited to be talking to some of the most interesting bankers that I can think of. Not just about, your career, which we'll get into, but kind of pinging you on some thoughts on the day. And there's so much going on in banking right now. It's a little hard to figure out what we should focus on. But I really wanted to talk to you about banking as a service and payments. And I know that's one of your passions. But first, can you tell me a little bit about yourself and something your banker colleagues may not know about you?
Sure. So I'm a lifelong payments banker. I got my start, the first third of my career at the FDIC, where I worked primarily in the consumer compliance area, community reinvestment, information security, technology, those sorts of things. No one believes me that I'm a born again compliance officer, but that is my background, and that first third of my career. Incredibly valuable, spending most of my time examining banks here in the Midwest, including here in South Dakota, where I am, where we have a plethora, at that time anyway, mostly credit card banks. And so that experience, spending time inside of those credit card shops, really kind of drove my passion for payments. And like I said, after about almost 10 years, I decided that I'm going to move over to the banker side of the table. And I've been doing that ever since, almost always on the banking side of consumer payments, whether it's credit or prepaid or ACHs or whatever form of electronic transactions. That's kind of been my background.
It's so funny, as I was just talking to a fellow Nebraskan who works in mortgage compliance at a mortgage firm, and she and I were making fun. She was like, is it so stereotypical of me that I'm surprised that this bank is in South Dakota? And I was like, no, honestly, that was my first thought too, being from Nebraska and always, needing to beef with my Midwestern neighbors. But then I was like, but South Dakota is the height of banking sophistication, in the Midwest, at least, right? And so I was sending her so many articles about why South Dakota as a state became such a specialty area, especially for the credit card banks, and kind of taking her through the same process I did of being that is not my image of South Dakota at all.
Yeah, there's a great talk. I mean, we always say all roads lead back to Citibank. And so if you go back to the mid 80s when interest rates and usury rates in New York were so difficult for Citibank to try to make a margin. They reached out to a number of states, South Dakota included. It really came down to South Dakota and Missouri, where they said, basically, if you get rid of your usury limit, we'll move our credit card operations to your state. South Dakota, coming out of the ag crisis at the time, we were all ears. And the governor, who was an interesting character at that time, pulled the legislature together and really in a matter of weeks changed the usury law. Citibank committed, and here we are. And so everything sprouted from that, because what sprouted from there was more credit card issuers incubating here. Up sprouts the whole plethora of prepaid cards. After that, all forms of fintech payments. And it all kind of goes back that way. And there's a real infrastructure and a talent base, and it just sort of keeps incubating itself.
And I think that's really interesting, because we think about, kind of the unintended consequences of Durbin and how it led to another wave of fintech and innovation. And then this is one of those decisions too that maybe likely wasn't thought to be as impactful. Maybe it was just a revenue play getting some jobs, diversifying away from agriculture at the time. And it's really kind of shaped the industry. And, I led to a whole, I don't want to say it's a cottage industry because it's so much bigger than that, but just like a strange specialty coming out of, again, from this Nebraskan, a state that we kind of look down on a little bit.
It's hard to imagine. It's been a long time since I've seen the statistics, but it's hard to imagine that Sioux Falls isn't sort of the capital of card issuing between credit cards, prepaid cards, and the like. It's just I'm quite certain that that's the case.
Right. So how did you get into banking? You said, you were consumer compliance, you're FDIC. Did you just open the newspaper one day and see that the FDIC needed some consumer compliance people and you were like, I should apply?
Close. And it really was a matter of them coming up to the small college that I went to. And I mean, at that time, I didn't know what happened to a dollar when it went across the teller line. I had no idea. But I knew I liked rules and regulations. I thought about law school and that sort of thing. So it really felt pretty natural to me. And it's a great experience. You're hopping from bank to bank to bank at the time. So you're seeing you're being exposed to a ton of different things. So I always say, like, I can't imagine a better foundation to kind of build a banking career. I wasn't meant to be a lifelong bureaucrat, but certainly for the first third of my career, it was really the right platform for me anyway.
So today you are the Chief Payments Officer at First International Bank and Trust. Tell me about First International and what your job entails.
Yeah, of course. So FIBT is a North Dakota-based organization, been owned by the same family, the Stenjum family, been owned by the same family for 115 years now.
Oh my goodness.
We January 1st to 25, we cross over to the next generation of leadership here, passing the torch from Steve Stenjum, our longtime chairman, over to Peter Stenjum, our CEO. The whole family is very, very involved in the bank. And so we're unique in the sense that North Dakota home base is in Watford City in western North Dakota, where sort of the oil boom of the late 90s and 2000s in the Bakken area. That's the Bakken area Watford City is in the heart of that. So that created an interesting, dynamic for the organization as well. Our offices spread across North Dakota, into Minnesota, down here to South Dakota, and then in Arizona as well. The interesting thing about FIBT, about 7 years ago, they acquired a company called Intercept EFT.
Okay.
Rebranded it CodaPay. And at that time, it was a large originator of ACHs using FIBT and other banks as their ODFI. Bank decided that, the future is in electronic payments. And I always say, like, they were in banking as a service before anybody knew what banking as a service was.
Sure.
And so up sprouted CodaPay, or it really was sizable to begin with. And now they've grown the bank into a top 40 ACH originator. My job, is help people. We're professional money movers. We support payroll processors. We're supporting payroll for about 117,000 employers across the country. 1.5 million people get paid through CodaPay every month. And so my job here was to take that and grow it, think about different payment rails, different use cases, and all those sorts of fun things.
So all banks can do payments. It's one of the special privileges of being a bank, that plus, insured deposits and monetary policy transmission. And you talked a little bit about at least maybe the bulk of the payments business that CodaPay does. But what makes CodaPay special, and why can you be the 40th largest ACH original, but you're not the 40th largest bank in the country?
No, not even close. There's only about, if you set aside card issuers, there's only about 6 community banks, and I would say community banks maybe in that 10 billion and less. We're about 5.5 billion. There's only about 6 community banks on that list of 40. I think, CodaPay, the unique thing, and frankly, the reason why I'm here is that CodaPay, over the years, even before the bank acquired it, they built such infrastructure. And many times it's custom development. So very proprietary infrastructure to move money at honestly tremendous scale. I mean, this year we'll move $160 billion this year.
That's crazy.
And so to come here and see the infrastructure that's been built and be able to leverage that and not have to start from scratch. I think, maybe getting back to your point, for many banks, this is a start from scratch, which can be pretty daunting. We always say, I think CodaPay was really it jump started us. So we were able to skip past maybe the first 2 years of what most banks would be wrestling with as they think about this industry and said, look, we got that. Let's think about use cases and let's continue to build. That was really the exciting thing. And I think it's we're incredibly fortunate to have it.
Well, and I also think about all of the innovation that's happening in payments and how payments have really gone alongside, the development of the consumer internet or our smartphones, right? Payments are right there next to us in a way that not like bank accounts, banking, applying for a loan hasn't always been there. I think about, the creation of PayPal so you could buy stuff on eBay. And one of the things is to remember, that was a really hard problem. And there are problems with sending checks in the mail, especially to strangers. But that was the way for someone to send money over distance to a person that they didn't know without sending a wire before, right? And now, payments is getting more dispersed, or it's in more places, or we're going to talk about how it's embedded, and that payments is it feels so natural now, and removing all these weird barriers that used to exist and only became obvious really once it became possible to transact so digitally.
I think banking, if you go back to that period you were just talking about, at that time, I think many banks looked at themselves like an experience or a destination. I think that's changed over time. We have to think of ourselves as enablers. And so, maybe we're not the walk into the branch experience. My kids couldn't even imagine doing that right now. But at the same time, I think it's interesting for community banks because in the end, they still want their money to be safe and secure. They want to connect it to all the cool applications. They want to be able to kind of think about how they want to actually transact. But I think in the end, where their money is stored, albeit they may not completely think about where their branch is, they want to know the safety and security of their underlying funds. And so the whole concept of enablement is, I think, where the industry is starting to find real traction, especially for some of the banks that got into payments early.
So you and I have a mutual interest in banking as a service and general fascination about what's gone on in the space, good and bad. First off, how would you describe banking as a service to listeners, and how would you describe its evolution?
Yeah, and I think I did a LinkedIn article just come up on 2 years ago where I sort of thought about this, picking up on this concept earlier, where I said sort of here in Sioux Falls, all roads lead back to Citibank. Well, if you think about where banking as a service started, and you think about those sort of 1.0 pioneers, and I'm thinking about the meta banks, of course, that are now Pathward and the Bank Corps. And, this thing started Sunrise and others. This thing started very much in a prepaid card environment. But I think that's just a device. The prepaid card is just a device. What you're really talking about is electronic payments. Yeah. And so I think those first movers, they sort of laid the groundwork. Now, I think that model has changed over time, and I think what we saw in maybe the 2020, 2017, 2018 up sprouts this sort of new model, this middleware model where, the connectors of finding early stage, interesting, compelling fintechs and partnering them with, in many cases, inexperienced banks, and putting that together and making programs at scale. I think many thought that was going to be the next evolution. Sitting here now, hindsight being 2020, we know that didn't work very well. And I think, when I describe banking as a service, what I really focus on is what we've done since that experience coming out of, when venture money was falling out of the sky. It's the survivors and the folks that were able to morph their business model, or the new entrants coming in and thinking about this 2.0 model and maybe now putting that 1.0 model behind us. And I think that's probably where we are today. In the end, it's partner banking. It's banks bringing payment rails and deposit insurance and legal authority sort of right to the end of the infrastructure, and then marrying that with superior user experience and the ability to acquire customers outside of a retail banking environment.
Yeah.
That's banking as a service. Now, the models have shifted and morphed and evolved, but in its simplest form, I like to think of it really as wholesale banking.
Yeah, I mean, it's funny. So I think you're totally right about the role that the different incentives and the players and the sophistication of the players. I also think, you bring up an interesting point about the role that the available technology and how this, I don't even want to say channels, but the idea that you would use prepaid cards to do anything, never mind fuel this like entire subset of revenue growth and risk for community banks. And then to think, from your background as consumer compliance, all of the challenges that would come from both putting a number of chains between you and your end customer that could come out from that, and then also the number of risks that could come from it, or the compliance challenges that can come from, lots of like just multiples more customers.
Yeah, I think what we saw in that experience, 5 or so years ago, was really a function of, and I'm probably oversimplifying, but the bank just didn't have access to the switch. There wasn't the necessary control, and it didn't mean they need to own the switch, but they were able to get to it. And so when the bank doesn't have the switch, and a third party non-bank has the switch, finding partnerships with other third parties. I think some of us that have been around a long time and have hair the color of mine probably saw that and said, I don't see that as a viable option. What I always say is that model would never survive scale and scrutiny. They might have built it for scale. I'm not sure they built it for scrutiny. And I think we've all learned from that, and we've learned that we've got that the models have to be bank centric. I don't see a path forward that isn't bank centric. And I try to oftentimes say, look, you're just a banker talking like a banker. But in this day and age, even as the political winds change, in the end, I still go back to you're the chartering entity providing deposit insurance for, in many cases, some pretty vulnerable consumers. It's got to start here.
Yeah. Yeah. So let's talk a little bit about kind of the economics, I guess, or the appeal of banking as a service. So why was banking as a service appealing to community banks, and what was so risky about it? Or how has that, what was maybe risky in the most recent wave that we've seen?
Yeah, so maybe the first part of the question, certainly everybody in banking understands that the ability to attract, reasonably priced or low-cost deposits, a tremendous challenge, right? Look at my own institution. We're scattered across the upper Midwest for the most part.
The deposit-rich upper Midwest, famously. Yeah.
Okay, let's just say the highly competitive deposit-rich upper Midwest, but nonetheless sparsely populated. The deposits to grow our organization weren't going to come entirely from our footprint.
Sure.
And I think many banks saw that. And so the ability to attract deposits from geographically dispersed sources where you weren't quite so prone to local market conditions, and be able to pull deposits from a broader geographic area than maybe what you would ever have thought about before banking as a service was certainly attractive. Of course, non-interest income, a non-capital intensive way to drive income for the organization. That's naturally attractive for any bank. You put those together. Also, you think about, sort of the ceiling created by the Durbin Amendment.
Sure.
It's no wonder that banks sort of in that $1 to $9 to $10 billion range said, hey, this is something that I think we need to seriously think about. We have competitive advantages created by certain rules and laws. And many of us, us included, felt like we had the expertise to do it. And so I think that's why you're finding this niche, this band of banks that some have had troubles, but certainly some of them have been very successful doing it. I think the second half to your question, sort of where the risk lies, obviously I think the risk lies when the bank doesn't feel like they can defend to everybody external to them, whether that be a regulator, a plaintiff's attorney, a consumer, a community group, it doesn't matter. Anybody that might be hypercritical, when the bank can't say that they have their arms around what's going on, or they're not able to convincingly explain that, I think that's the start of what probably doesn't pass the proverbial smell test, and probably what I think now everybody has realized and adjusted to.
Also, I kind of forgot that you had mentioned North Dakota earlier. Have you gone to the Corner Post gas station that's going to try to lower the Durbin Amendment? Were you able to use a card there? Did
you know that the Corner Post gas station is in North Dakota and is a customer of First International Bank and Trust?
No. They're coming after your Durbin. I hate to be like this, but they're coming after that Durbin fee.
I can't make a convincing argument to them.
Well, I'm sorry that you're they're your customer. But I was wondering, I was like, should card processors work with this company? Just, like no one's forcing you to take a card, right? Like,
Yeah, I mean, I think what's happening is the merchants are obviously highly sensitive to the
sure.
cost of payment acceptance, right?
Yeah.
At the same time, I think
Which
they
is
also
not free to run. It's not free
no,
to operate.
it's not free for us. Let's just get that out there right now. But I think what it really drives you is the merchants still want fast payment acceptance. They don't want to have to deal with cash. They certainly don't want to have to deal with checks. And it's just market forces, sort of battling it out and finding, where the sweet spot is on payments acceptance. I don't get too caught up in, the future of the Durbin Amendment.
Yeah.
I think in the end, service always wins, and reputation always wins. So that's sort of our approach.
Yeah, you got someone go up to Corner Post and explain pay by bank to them. I think that's if they're upset about merchant fees and think Durbin is too high. Get that letter in to the ANPR for Section 1033. Call it a day. Anyways, sorry. Back to my questions.
You had to get open banking in there. It wouldn't be a podcast without 1033.
I mean, how many times am I talking about North Dakota?
I know.
So anytime I got to mention Corner Post. So one thing that you mentioned the incentives with banking as a service, which is that it's most financially rewarding for banks under $10 billion in assets. Although I kind of am like, I think big banks could play here, but that doesn't necessarily mean that a bank that's under 10 billion would be unsophisticated, but I think some banks in this asset size are, because they are just smaller banks and they have not built up payment specialties or maybe large consumer bases where just kind of some of the risks that can come from managing those that group. Let's talk about the operational complexity of BaaS and maybe like how technology helps this and how technology hurts this.
Sure. I think it all comes back to the idea that if you start every conversation with, okay, this looks like new technology, I better call my core. If that's your response, I'm not sure banking as a service is a great place to start your venture, because dependency on a core, you really have to throw that out the window around banking as a service. You have to come to this thing and say, I'm going to build technology. My partners are going to build technology. I'm going to go get technology. I'm going to put it together and try to make something work operationally. Yeah. And so I think there's a mindset around it that you have to think differently than what you probably have. And I think for some of the smaller community banks that have thought about this space, that was just too big of a leap for them.
Yeah.
And I think, operational challenges, you think about money's moving fast and it's typically a lot and it's typically, of course, needs to be reconciled. We talk about, you talk about 1033 a lot. I think all I talk about is reconciliation anymore. But that's a cornerstone of this thing, right? You have a bunch of sub ledgers and you're trying to reconcile it.
Payments, right? Like stuff
absolutely.
has to settle to a penny.
It does. It has to drive back to the penny. And if it doesn't, you have layers and layers of problems at that point. Because what can happen oftentimes is that one little out of balance situation tends to snowball, and then there's no bringing it back.
You mean it doesn't fix itself? It's not like a car light that just turns off.
I'm just going to park that out of balance over here. I'll get back to that at some point. No, of course not.
Yeah.
We always say, transactions can't hit the floor. And they have to have a home and they have to drive into the appropriate general ledgers, and nothing can ever hit the floor. Because if one hits the floor, it's usually meaning that there's a gap or a parameter or something, and there's more that are hitting the floor that you probably don't even know about.
It's funny because I like my interest in banking as a service kind of came through a bunch of different ways: prepaid, the Bancorp's consent order, broker deposits, all that kind of thing. And then I have an accounting, a weird accounting specialty. And that kind of came up through Cecil, but now I use a budgeting app that also makes me reconcile. And I'm just a girl, you know what I mean? I'm not 20 transactions a day over here. And sometimes when stuff gets out of reconciliation, or there's cashback offer, or there was a foreign transaction thing, or, on tipping, right? When you go out to eat, your tip isn't put in right away.
No, of course
And
not.
some of that stuff, how am I having these issues?
My favorite is like, oh, I may have left the establishment and forgot to actually pay out
Close
my
out.
tab, and now the
Yeah.
20% just gets added on. So yeah, I've been known to do that as well. And I think you're unique, obviously, and you're using apps and services that make sure you reconcile and balance, right? And I think that's fantastic. Let's transition over to my children who just trust the balance that's in the account, right?
Oh my God. Yeah. You open your bank account and it just tells you a number.
And so the conversation we have is like, look, you have to assume that most people are more like my kids and not like Kiah. And I think that puts a lot of responsibility on the part of the bank. And I think it stems with the whole idea of like, I tell our folks, we have to treat each customer's balance as though it's all they have. Mm-hmm. We have to assume that the last nickel of they have is in our bank. And that carries with it a lot of weight and responsibility. Forget for a second the regulatory requirements and the fact that we all know that we have lots of regulation and examiners and et cetera. It's the responsibility that it carries with to say, look, they may not be reconciling. I'm going to make sure that it's right, because if it's the last nickel they have to their name, every penny matters. And I think that's the mentality people have to have if you're going to be in this space.
Honestly, something we haven't really talked about is how like digital payments and cards and online banking and just having like a bank account app has really taken away the like discipline that everyone used to have to reconcile. And that like if you overdrafted because you weren't updating your ledger, like that was a you problem. And it is interesting because I don't think banks' responsibility had changed much in that, but how consumers conceptualize that number and who was responsible for having the accurate number, and basically like, almost kind of capitulating, like just the number that's in my account is the right number. And then, we've had some issues over time about like overdraft orders or, these kinds of things that kind of come from some of the just externalizing or outsourcing your reconciliation. And I'm not saying like that's a bank's fault, but it is interesting to reflect as a consumer that like I used to bank at a credit union with only checks. Like I got a debit card when I first moved to college.
Sorry,
I'm sorry. It was the right choice for me as a 12-year-old.
I'm kidding.
But then I got this job. Like I was a soccer referee, and then my parents let me have control over my money. And then, but like that meant like I could spend my money the way I wanted, but I had to like reconcile. and like it was a whole thing for me to do this. Like it was a nightmare as like a teenager.
And where we've seen bad actors emerge is the ones that take advantage of the fact that you're not reconciling it.
Yeah.
And you're going to slip into situations. And some of the worst products that we've seen on the market is really a function of people just taking advantage of the end consumer. Mm-hmm. And obviously, we don't want to have any part of that, and I'm pretty sure most all of my peers don't either. So,
in banking, conditions change fast. Credit teams need to adapt without sacrificing credit quality, compliance, or control. That's why banks choose Tactile's AI decision platform. It gives teams the power to design, test, and refine credit, fraud, and compliance workflows using AI quickly and securely. With seamless data integrations and built-in testing, every decision flow can be optimized in real time. With Tactile, AI isn't a black box. It's transparent, explainable, and regulator ready, so banks are always prepared for what's next. For more information, visit tactile.com. So, last year, or in the last 2 years, regulators went so hard on the banking as a service space. I think, one, there was some players that maybe weren't as serious or weren't as prepared for some of the regulatory, financial, compliance risks that came out of it. Obviously there's some public failures that I would say, and I think maybe mixed in that, and it was my always reading, but like they just went hard on everyone in the space, and because they just realized like this was maybe a higher regulatory risk play than not doing banking as a service. So how has you've seen the attitudes change. Have they changed?
So, long-winded answer. Good morning. I always think that regulation and expertise among bank regulators lags the particular innovation by about 2 years.
Okay.
And so I believe that what you saw is this emergence of this BAS 1.0 model in this 2017, 18, 19 window. And lo and behold, 2 years later, the wave of consent orders started. Now, I think what happened is that in due time, the agencies understand risk, begin to look across and say, here's our approach. Now, to us, it might feel late. To them, I think it's just a natural lag. And so I think there's two waves, right? Now, people always say, okay, it must be getting a lot easier. I don't think it's getting easier at all. I think in the sense that what's happening is now we have found, and I talk to lots of peers across the country, that the examiners we deal with, they understand this business, and they're asking the right questions. I'm impressed at their knowledge level, and how much they've gotten on top of the curve. They have specialists now for banking as a service, and they understand the risks. And so I think what banks may have found themselves doing a lot of explaining 5 years ago. I can tell you firsthand, and I can tell you from talking to a lot of my peers, we don't do a lot of explaining because they understand it, and they can hone in and understand. They have the right questions to ask, and I think that's good.
Would you say there's, I guess, like, what I would hear sometimes is that there was maybe an element of fear or caution? Or how would you, if you think that they have more knowledge now, has that attitude maybe changed and there's maybe more confidence in these conversations, or how would you describe their orientation?
Yeah, I think perhaps. I think everybody understands, go back to my 1.0 model, that relic is, I think, behind us for the most part. It's not going to reemerge. The middleware connector model, I know there's some still doing it, and good luck, obviously, but we're turning, I think the industry's turned a page here, thank goodness. I think now, I think our regulatory friends, they certainly understand it better, and they certainly understand the models that they believe are the appropriate models to go forward on. And so I think one of I know we always jump to, we've had a change in administration and therefore all the consent orders have stopped. I really believe
I just think that we ran out of banks to give consent orders to.
No, don't say that. That's bad luck. Yeah, that's very bad luck. No, there's lots of us that don't have any intention of ever seeing a consent order. But I think what we really are seeing is, the obvious structural flaws of that early model. We've sort of washed through that, and new models are emerging, new models that make more sense to think about scale and scrutiny. And so I really stay optimistic that regardless of the administration, the model has simply improved, and it's recentered itself more appropriately around the bank. And so that gives me a lot of hope that, the players that are in the space now are doing it well. A lot of us, we felt a lot of the blowback of some of the 1.0 actors. And so a lot of us sit here and say, man, I'm really glad we've worked our way through that, because now we can have real conversations with regulators, and we don't have to convince them that, hey, that we don't do that, whatever that happens to be.
Yeah.
And so I think, just the environment right now feels different to me. I think everybody, even prospects and partners that we talk to, they see it too. Like where they might have said, boy, I really wish I could have somebody in between me and that bank, and I wish I didn't have to tell them everything. Those days, I think, are gone. And if you ever find a partner that says that, I would certainly caution you carefully on that one.
So last year, CodaPay announced a division called Cavenue, and I feel like we're kind of walking up towards this maybe next of evolution. So what is Cavenue, and how do you see Cavenue relating to BAS and embedded finance? Like, connect these dots for us.
Sure. I put us, if you think about, this 2.0 model, I think what you're seeing in a bank-centric approach, it leaves the bank with two choices. One is, I'm going to go find technology myself and drive partners that way in a technology stack that I control, right? Others, and I put us in this category, said, look, I'm just going to go build it. Either way, we're removing middleware. Middleware, by just the sound of middleware, sounds inherently inefficient and inherently difficult on financials. Like, you always want to get rid of middleware wherever it's possible, right?
I kind of like liked the idea. I didn't hate it. I guess I didn't hate it. It was bad on execution. And I feel like there's like the mesh layers that banks need because their tech stack is bad, but so I can kind of understand the impulse.
It's a natural reaction to say, boy, that solves for all my problems. Go do that for me.
Right.
You can't outsource that completely. You can't just say, look, I've got somebody handling that. I don't need to be involved. It's got to be a little more bank centric. For us, Cavenue, giving that background of CodaPay and the fact we had all this infrastructure and we're moving money at scale, we're reconciling at scale, it only made sense that we build banking as a service as our own platform. And so Cavenue is really our cloud native, open API gateway to the ecosystem is the easiest way to describe it. Partners come to us and we want to be the spot where we can provide all the services from all of the various parties involved in order to support that payments product. And so I say technology lends control to a program, right? If I'm a hub and not merely a spoke, using that sort of tired example, you are by nature in the middle of it, right? You're seeing things, you're more involved, you have controls, you know where the switch is. Cavenue is really our way of doing that. And I think we took a very DIY approach.
Okay.
That's not for everybody. Other people can put stacks together or go find partners that do that. Absolutely get that. Probably wasn't as easy 5 years ago when the cores didn't really have a solution and people were kind of scrambling. I think that kind of helped this middleware model emerge in the absence or the void of the cores. I think that's changing now, and I think we just very much took a DIY approach. We think of it, one connection, one contract, and so if you talk to us from a technology standpoint, you're probably talking to us for compliance at the same time. Makes for a really straightforward model.
Do you think now is a good time for a community bank to enter banking as a service if they haven't done it before?
I believe I would encourage them, if they're going to do it, to accelerate their plans. I think 2 years from now, I think it's going to be very, very hard to do it. And so I think we're riding a wave here in a lot of positive ways. And so I would encourage folks that are getting into it, A, don't compete with me. And then B, I probably would be looking to do it sooner rather than later.
Yeah. Well, but don't you think that 2 year kind of timeline gets us into some of the same problems we got with BaaS 2.0, the worst parts of it? If you're not ready to do it today?
I think if you're not, first off, make sure you are ready. I've given a lot of talks about we went through a whole readiness plan. This whole thing this was a year for us, a year sort of in the making before we even said we have our first program at that point. So obviously, don't accelerate it in a reckless fashion, but I don't think I'd wait around longer than necessary either.
I always think that in banking, making a decision and being this is how we'll win and this is how we're going to this is what we'll do to every step, from our vision backwards, and then just acting. And I think there's kind of sometimes an action problem in banking, and that people don't act until it's too late. So they either kind of miss, everything's been kind of commoditized out, or they're kind of just takers of everything. I don't know. So I always think this action problem is really interesting, especially in banks, because I think everything in banking is kind of set up towards inaction or not doing something versus doing something.
Yeah, I think the advice I would give, if anybody wants it, is making sure that you have the right culture as an organization to accept the ability to make a decision with less than 100% of every possible detail, risk scenario, compensating factor, et cetera, right? Now, it doesn't mean you have to be reckless, but I think to your point, banks want every single box checked before they do something. This space, you find yourselves having to work that way, right? And so it's not as though you want to be reckless or what I want to say, sort of, kind of frivolous in the way you approach things, but at the same time, perfection is probably not the right way to think about how to go forward.
So, given your view of the space and where you guys sit, how many banks do you think do BaaS today, and what do you think the market demand is?
So, two things there. We track, and I know I've seen numbers all over in the 130-ish range probably. We track about 60 banks,
Okay.
quarterly UBPR data, and we bucket them into three categories. One is, I would say, is BaaS heavy or BaaS, completely BaaS. And
Yeah.
think about the green dots and the pathwords and the bank corps. And I know they would say I'm not completely BaaS. I get that, but I mean, it is a major piece of their business. They're dependent on BaaS revenue for them. So there's probably four or five of them, and
Okay.
in the way we look at it. And then I think there's hybrid banks that say, look, I'm interested in a wholesale play. I'm interested in finding diversity in how I acquire deposits. I'm certainly interested in non-interest income. But by myself, I'm a very viable organization, and I'm still, putting out great metrics. But nonetheless, this is a place that we want to play. I put us in that category. So I think there's a hybrid play. And then we monitor early entrants too, where we're hearing things about an entrant. And so then we watch key metrics, right? We're watching the net interest margin. We're watching, the changes in their deposit makeup and understanding, like, are they starting to see some of these things play out?
Yeah.
I think what we're going to see is you're going to see more banks get in. What you probably are not going to see is a replication of the Pathward bank court model. I mean, when I was at Pathward, then Meta, you're talking about hundreds and hundreds of programs running on dozens and dozens of processors. That, I don't think they made that work. Congratulations. I don't think that's really something that's going to be replicated. So I think what you're going to find is banks come in and find 2, 3, 5 programs that drive meaningful deposits into the organization, drive some nice interest income, but, aren't taking over the organization. Because I think once you get above that, then you got to think about, I need some real infrastructure here because now I'm making a business out of this. So I think that's what I'm seeing more than anything else. And one of the things, I'll just make a comment too. I'm also seeing banks get in the space that don't have a viable bank without banking as a service. And so I think that makes me very, very nervous. And so I think, and Cornerstone does a good job. I can see their chart I can visualize their chart right now. But there's some banks in this thing that don't have impressive net interest margins, aren't wonderfully capitalized, don't produce a nice return on equity or return on average assets. They might be looking at BaaS as a survival approach. Mm-hmm. I would caution. That's not the way I would view BaaS. Actually, I would say.
Well, and it reminds me of like the saying, like, you can't grow out of your problems, and you kind of like, you're like, I'm reading like a book about a bank failure right now, and you're like,
me too.
Oh, okay. Mine's First National Bank of Keystone, because there's this like a book about it, and they were talking about, and like when you first hear like, why can't I grow out of my problems, like, and you just understand like the problem just gets bigger if you're not actually willing to take the hit. Like, I think in banking especially, like, if a problem really should be addressed with capital, like, there's just not other ways to always address that problem not using capital. And so it's just like, especially with like something like banking as a service, you're like, okay, if you have a problem with like growth and
credit quality,
and it's just like, no, you're just adding onto your problems.
Yeah, so it can become a distraction for core issues that you really need to be addressing, for sure. We just saw a bank that's got been ordered to go recapitalize now.
I know.
That's not a bank that should be banking as a service.
So before we move on from banking as a service, what lessons have you taken away from BaaS? We talked a little bit about kind of culture, decision-making in where everything's not 100% clear, and kind of managing risks from there. Anything else from what you've seen, like just kind of core takeaways going forward?
I think the culture, one thing I probably underestimated, having done this in a couple places, but probably understanding the way in which a BaaS approach can disrupt an organization that didn't know what BaaS was prior to that.
Yeah.
And the way the dichotomy has to work, and the communication and the education, and just trying to make two what feels like very different areas try to come together and think about it very strategically as an organization. I think I probably have underestimated that at times. And I think That's very important. I mean, if you ask me where
Yeah.
I would start, I would really look at the culture of your organization. And it's not just the risk areas. Everybody picks on the compliance people. I'm an old compliance person, so I don't like seeing our compliance people getting picked on. But I think it's cultural, right? It's why are the BAS people, why are they getting all the new hires and I'm not getting any new hires? Or it's that kind of stuff that you want to
Yeah.
deal with and nip it in the bud. And then really think about from a leadership standpoint, like this is a key piece of our strategy. And like
Hmm.
any strategy, whether it's a new line of credit business that we're going to get to on the credit side, or maybe we're going to get into a different version of wealth services or something like that. Like this is a strategic play for the organization, and we have to figure out a way to make it work together. I'm very fortunate. I do not have these problems here at FIBT, but I've
Yeah.
seen that, and I think that slows down what probably people thought I'm going to be in this thing in a year and a half, and away we go. The organization has to be ready for it.
Yeah, I often think about with banking as a service, especially when a bank enters it, like what parts of your identity will not change and what parts of your identity will need to change, especially if you think about a community bank that gets most of its deposits locally and maybe makes loans to certain borrowers. And even from a financial perspective, I've seen, the earliest banking as a service banks, it really changes their loan portfolio. And I've always thought that that was so interesting that the bank has to just kind of understand that from an ALCO, asset liability
You took the words
matching.
out of my mouth. I was just going to go there.
But it's one thing to sell off your community bank loan portfolio. It's another thing to realize that's not a good match anymore for your liquidities, right?
I get into the same ALCO meetings you're talking about. And I want to make us more competitive in our local markets, right? I want to drive lower cost deposits so we can be more competitive on the loan side and still not have to sacrifice net interest margin, right? So I'm thinking about commercial lenders saying, look, I want to make you more competitive to out and get the business that was hard to get at the rates that the borrower wants. I want to be able to let them serve that because
Yeah.
I'm keeping our core cost of deposits at a good spot. I'm driving nice non-interest income. And so I don't want the last thing we're going to do here is ever sell off our community banking presence in any of
Sure.
our markets. I want our BAS play to make us more competitive in those markets.
For sure, for sure. It's more like, you can't really be making some of these really long loans with that really short
It
book.
certainly changes the way in which you approach, sort of funds management, liquidity, interest rate risk, all those sorts of things. But
Yeah.
and there's a level of sophistication necessary. You think about tech sophistication, there's a financial sophistication to it too, on what you want to do around what most would say are non-core deposits, and what you think you can do to augment, lending and those sorts of things. But I think done well, I think it's a good problem to have.
All right, I've got some tech questions for you that are not related to banking as a service, and I'll go through these kind of lightning round. How do you learn about technology today, and what tech topics interest you?
Man, I read everything. And so I was really hoping I'd be able to retire before crypto and stablecoin actually became like a real thing. Like I
Oh
really
no,
had it
I'm so
on.
sorry.
I really had it on my
You
plan
really
to
missed
say,
your window. You kind of
don't worry about that,
yeah,
right?
yeah.
I did miss a window there, but I think the way in which I sort of stay relevant is I have an aspiration to like be able to code myself. Like I really have an aspiration to be able to code APIs. Now, look, I'm going to do the basic stuff and I'm going to play around with it, but I mean it's really getting in and learning.
Yeah.
And then I think honestly, you just surround yourself with really competent people that you just feel comfortable learning from. I learn from the people around me,
Sure.
and the way they talk, and I want to understand. And I'm saying, look, break that down. Let's build it back up so I can understand it.
Yeah.
And so, yeah, from a technology standpoint, I'm not a technologist. I feel pretty darn comfortable around it, and I enjoy technology, but I know my limits. But man, I just really think it comes down to getting down in the guts of whatever the technology is and trying to learn it.
Okay. Uh, how is your bank using AI today? And do you know about vibe coding? Because it sounds like you could use that for your APIs.
No, I don't know about vibe coding. I'm not sure I want to know, Kia. No, I'm just kidding. We look hard at AI right now. We've got a whole task force looking at it.
Okay.
I think the most relevant approaches for us: fraud management, fraud mitigation.
Sure.
Probably an underwriting play, particularly around consumer.
Okay.
One of my responsibilities is consumer credit cards. I could see an AI play there for sure. I also love the idea of AI and the way in which we customer services approaches to
Okay.
customer service, predicting the reason for the call, predicting the likelihood of a dispute outcome, and then solutioning for that ahead of time. That's kind of the cool stuff that I get very interested in.
Yeah. Okay. So, what are your thoughts on open banking, which we mentioned a little bit earlier?
Yeah. It is not going to go away.
Okay.
I don't think we can rule make away open banking. Now, I know we read a lot about
We're not
the
trying to rule make it away. We're trying to bring it in through
true,
rulemaking.
true, but then when the rulemaking suddenly goes absent
Oh,
and
yeah,
the banks
yeah.
start to feel very comfortable charging fees to access consumer data, I think what I don't like is the way in which consumer data can continue to find itself being used for reasons other than the original purpose in which data was shared. And so I think once you start thinking about secondary and uses of that data that may not have been part of the authorization to begin with,
Mm-hmm.
or probably we're stretching beyond the limits of what the consumer may have wanted. There's where I think is a ripe spot for solid regulation. But look, I think as much as we don't want a competitor coming in and obtaining customer information of ours, they don't want us doing it as well.
Yeah.
And in the end, the consumer's saying, "Look, what I really want is I want to go buy." All these I always say I use the example of toasters, right? I don't care what type of toaster a consumer does, but when they plug it into the wall, it's got to work, and that's why
Yeah.
I look at our role as like, look, when they plug that app in, they
Mm-hmm.
want it to work, and if it doesn't work, they're going to move their deposit, right? And so we have to be prepared for that, just like
Yeah.
everybody else does.
Since you didn't retire in time, what are your
I
thoughts
know.
on crypto and stablecoin?
You may have seen last week I was in Bismarck, North Dakota. Beautiful town, by the way. Everybody should go to Bismarck for the unveiling of the Rough Rider coin.
Oh,
Now, if
that's
you saw,
right.
yeah, so if you saw the Rough Rider coin, the Bank of North Dakota. North Dakota has a very unique.
They
They
have
have a
their own
state
bank.
bank.
Yeah.
They have a chartered state bank, part of the government of the state of North Dakota. Only one in the country.
Mm-hmm.
The folks at Bank of North Dakota, they're very progressive. You think about a state bank in a very rural area of the country. They not only do great things to support the local economies and the local banks and the community banks, but they're thinking about the ways in which they can serve as the innovation driver for North Dakota banks. And so they
Right.
launched the Rough Rider coin. I think it's a really good example of the opportunity created by stablecoin, blockchain, et cetera, because their vision is very niche, and it's very, very specific. They want to allow banks to move stable coins and settle funds among one another
Yeah.
inside the state of North Dakota.
Yeah,
Makes
because they're
perfect
like a
sense.
correspondent bank for
Right.
banks in North Dakota.
And they want to be
Right.
able to facilitate loan payoffs back and forth between banks. They want to be
Sure.
able to facilitate real-time funds movement. The other unique application, so that makes a ton of sense to me. The other unique application that I think is very unique for North Dakota, and I mentioned the Bakken oil reserves in western North Dakota.
Mm-hmm.
We have a lot of energy companies. We have a lot of oil companies, natural gas companies.
Yeah.
They want to be able to make international payments to companies and vendors in countries where digital currency is farther along than ours, right?
Okay.
And so that seems like a very niche place for the Rough Rider coin to be. And so I'm a big advocate for what they're doing. But again, I think you probably hear me say like these are very specific use cases.
Yeah.
I will be retired before I buy a cup of coffee with a stable coin. That I can promise you. But I think when it comes to B2B transactions, international transactions, trying to get out of volatile currencies and trying to
Yeah.
do real-time transactions makes a ton of sense.
It's funny because it's like, okay, the one bank in the country found a really good use case, and it's like, oh, they're a correspondent bank. They're doing this already.
Maybe that's telling. Maybe that's telling about where stablecoin, where the opportunities lie,
Yeah.
is in that sort of secondary market type environment.
Yeah, it all comes back down to ledgers. Honestly, like I'm completely convinced. So in our final couple of minutes, what is your favorite non-bank topic to talk about? And what would you be if you couldn't be a banker? What would you be, or a regulator?
Yeah. So I always say this. I would have loved to have been a sports agent. I
What?
absolutely would have loved. I would have loved to represent athletes and negotiate deals with now universities, of course, but then professional sports teams. I go back to Jerry Maguire, man. Jerry Maguire, that's just right up there as one of my favorite movies. And so, yeah, I would have liked to have been Jerry Maguire.
Okay. And then and is that your favorite non-bank topic to talk about?
Yeah, I love sports for sure. I'm a huge sports fan, so I would say that probably is that's the University of Iowa right there, in case you're curious. So, yeah.
Well, is that where you went to school? Because I went to the University of Nebraska, and so I think we are rivals.
No, and I'm sorry you went to Nebraska. I hope you went to and got a master's somewhere else to compensate for the education at the University of Nebraska.
It was fine.
I'm kidding.
State schools
Nebraska
are fine.
alums, don't blow up my social media. Yeah, so no, I went to a small college in Iowa, but I'm a native Iowan and a huge Hawkeye fan.
And then what is your smallest bank-related hill that you'll die on? And then I'll go first. Your conversation about using the UBPR to track the BAS banks reminds me how we just need a call report line item. I mentioned this to former Vice Chair Hill, and I didn't see it get proposed. And now I'm really hoping that was, just one of his first orders of business is to add that to the call report. We could the way that we added listing service deposits to the call report, which used to not have its own breakout, and I think is important to track because if we think broker deposits are risky, we should probably be tracking this thing that looks like a broker deposit but doesn't come from a broker. And so I think we should just add an embedded finance banking as a service line item I don't know. I just want it.
I want the record to show all my coworkers at FIBT, I am not advocating for more complexity in the call report.
It's just one line item in the call report. It would make your job easier to track the BAS banks.
I hear you. So let's do this. I will propose 5 things that should come out of the call report for that one thing to go in.
Yeah.
No, I think that's a great one. The hill I die on, I love to build good customer experiences. And
this is not a small hill. This is not a small hill.
But you think about some of the little niches, like my job's around digital payments and cards and those sorts of things. And I always tell, we're building some interesting things right now in a wallet environment. And I was like, look, I want to make the best possible customer experience, and you're going to have to force me off of that spot in order to do that. And you're right, it's not a small hill, but from a mentality standpoint, I start everywhere. Like, what's the best customer experience versus what do I think a regulator might say? And I better design it that way instead.
Sure.
We don't design products for regulators. We design products for consumers. And that's the hill I die on.
I'll accept that, but that doesn't seem small. And I was looking for some very small annoyances in banking.
I have lots of annoyances. What I'd love to do with the Community Reinvestment Act. Give me a little time.
That's not
You're
small.
Right. You're right. It's too big.
Think
You're
smaller.
Right. You're right.
Well, Trent, thank you so much for joining me today for this episode of Bankers Hours. I really enjoyed speaking with you.
I always enjoy it too, Kiah. Thank you for having me.
Thank you for listening to this episode of Bank Nerd Corner. Stay up to date with news and trends in the bank space by subscribing wherever you get your podcasts. Also, if you love FinTech Takes Banking, please tell a friend. Talk to you next time.